everyone, it's Rich Fly over here at P Capital Mortgage, and was doing a little research here over the weekend and found some interesting articles I just kind of want to share with you so you can kind of see what's coming down the pipeline. This gets back to me what I've always talking about, and it has to do with the media not really presenting the correct information. And some of it sometimes it can be tough because they're always trying to do it in these 2 to 3 minute little soundbite segments, or trying to get headlines. And going through reading some news articles today, it's surprising how much they missed the mark on what's actually happening. But this report came out. It was from Bank of America report through Global Research, and there's a risk of a credit event. Wow, really? So what a shock. This has all been building for, I don't know, for years, decades, whatever. But here's some things with this. I just want to point out a couple things that I just went through that I found. First of all, what we're seeing is real rates. That's as far as where the Fed funds rate is. And in regards to inflation, what we're seeing is that real rates are now over 2%. This is the highest they've been here in about, I think it's been about 14, 15 years or so. So the last time it was getting this high of a level, we have to go back to the 2008, 2009, the housing crisis that was going on that. Before that, where we saw something like this start to show up, was right after the dot-com bubble, and then when we went to recession. So both those times were recession. Again, this is just another indicator that the recession is coming some way or another. This is all starting to build on itself underneath the surface. But this is where it got interesting, because how we're all sort of interconnected globally, and this has to do with China. And the news is just starting coming out on this, and China is not doing very well at all. Their economy is starting to slow. So a couple of things with this, in particular on the real estate side of things and their credit and the debt that they've issued as well. So the largest real estate developer in China has filed for bankruptcy, and that was actually in this country because of some of the things that they're doing. They've had other major developers that are just not able to pay on their bond payments. A lot of that over there was just, it's almost like a pyramid scheme, as far as people were buying, and then they're getting more people to buy more properties and so on. And then the people have purchased properties or put down payments on properties that haven't even started yet. But they built these massive urban centers where nobody lives. And so at some point you realize this has got to come to a head. And that's exactly what we're seeing. So we're seeing their GDP decline. They're having issues with their economy. And here's one other important thing as well, is that their youth unemployment rate went over 21%. So you can see they're having a significant economic and demographic issue going on right now. They're trying to, instead of supporting the economy and that type of thing, they're taking their money and they're putting it into defense and building up the military. So if that gives you a hint as far as what direction they're going in. But China's struggling right now, and because so many countries are connected to China and what they provide, we might see this start to fill over, and you might start getting a little bit of a contagion effect. We'll see it maybe here in the States. You'll see it a lot more probably over in Europe. So again, more cracks that are starting to show up. And this just goes back to all this soft landing, no recession. I'm still in the camp where I don't see that. And so just, again, when we look at the data as far as what's happening, there's going to be some shifts going on. You're going to see some changes probably in the stock market. You're going to start to see some change eventually in the bond market and interest rates. So we'll see how this all plays out. The most important thing that we're seeing this week, of course, is Chairman Powell. When he speaks, everyone listens, because he will move the market, and we're going to see that on Friday. So we'll see how this all shapes up here by the end of the game.